Hey everybody, Scott with Premier Homes here. You know, one of the questions we get asked a lot is, how does this home loan process work? How can I get a mortgage? How do I know how much I can qualify for? These are all very important questions if you're considering buying a new home. So I just wanted to share with you what I like to call the secrets of mortgage finance, or the 5 things mortgage companies look at to determine exactly how much of a home loan you can qualify for. The first thing is they want you to have been employed in the same line of work for at least 2 years. Now, it doesn't have to be with the same company, ideally just the same line of work for at least 2 years. There are certain exceptions to that rule. So if you haven't been employed in the same line of work for at least 2 years, just shoot me a note in the comments or give me a call, and I'm happy to talk to you specifically about your situation and find out what you might be able to qualify for. The second thing they look at is your credit score. Now, in today's world, and it has changed from time to time over the years, but in today's world, ideally a credit score of 620 or higher is what many of the mortgage companies are looking for. It can go below that. Typically, it can go down into the 580 range before we really get into the red zone where you can't do anything today. But the best thing to do would be get a copy of your credit report, look to see what your credit score is, and then if it's below 620, we can give you some ideas and some suggestions on things you can do to raise it back up. But 620 or higher in terms of credit score. The third thing they look at is your cash situation. Specifically, do you have enough cash for a down payment, if any, and your share of any closing costs? Now, I say a down payment, if any, because if you've ever been active duty in the military, if you're currently active duty in the military, if you were active duty and you're retired or you were honorably discharged, then you're eligible for a VA home loan. And one of the great things about a VA home loan is they are truly zero down home loans. You don't have to have any down payment at all. If you're not eligible for a VA home loan, the next best loan product probably is an FHA home loan. That one requires at least a 3.5% down payment. Now, it doesn't have to be any more than 3.5%, but a minimum of 3.5% for an FHA home loan. And then, at least for now, we're one of only 2 builders in town that is able to offer special financing through the Colorado Housing and Finance Authority, or CHFA as it's known, which only requires $1,000 down, $1,000 of your own money, and then CHFA will loan you the balance of the down payment. But we're one of only 2 builders in town that can actually buy the rate down below CHFA's current market rate. It's through a special arrangement that our lender has with CHFA, and then we also have a special arrangement with our lender in order to do that. If you want more information on that program, again, shoot me a note in the comments or give me a call. I'm happy to answer any questions you may have. The fourth thing they look at, traditionally it's been 2 different ratios. The front ratio, or what we call the housing ratio, is they don't want your total monthly housing expense to exceed about 29 or 30% of your gross pay. Now, if you're married or if you're buying with someone, it would be 30% of your combined gross pay, not just your individual gross pay. The second ratio they look at is what they call the total debt ratio. That's where they take your total proposed housing expense plus any other long-term debt you would have, like a car loan, student loans, credit cards that would take longer than 6 months to pay off. But they don't want that ratio to ideally exceed about 45%. Now, again, the ratios are just guidelines. They can actually go higher than that. And I've seen many cases where they went considerably higher than that and people were still able to get approved. But ideally, 30% and 45% is kind of where they want to be. The last thing they look at is the home itself. They want the home to appraise for an amount equal to or above the purchase price, or you as the buyer are under no obligation to proceed. So the mortgage company will hire a neutral third-party appraiser to determine an opinion of value, and it has to be, like I said, at least at or above the purchase price, or you're under no obligation to proceed. So I hope this has been helpful. Again, if you have questions, just shoot me a note in the comments or feel free to call 719-209-2299, and I'm happy to answer any questions about your specific situation that you may have. Again, my name is Scott. My number is 719-209-2299, and I'm just here to help. Thanks.